Your money-making broadcast starts now. Wall Street, what a day. Alphabet up 10%, Meta down 8.6%, the biggest divergence in big tech earnings we've seen all year. The Fed held rates steady but with the highest level of dissent since 1992, and this morning's PCE inflation reading hit a nearly 3-year high, driven by the Iran conflict. I'm Chloe, and in the next 12 minutes we'll break down exactly what happened, why Qualcomm surged 15%, Caterpillar jumped 10%, and what Powell's decision to stay on as Fed governor means for your portfolio. Here's your April 30th market recap. First, the Fed aftermath. Wednesday's FOMC meeting was historic, not because of the rate decision itself, which was an expected hold, but because of the unprecedented dissent. 3 hawkish members voted against holding rates steady, the most dissenting votes since 1992. Fed Chair Powell confirmed he will remain as a Fed governor even after his chairmanship ends in May, calling Trump's criticism unprecedented. The market is now pricing an 86% chance that Kevin Warsh is confirmed by May 15, according to CalSure. Central banks across the Atlantic also made moves. The Bank of England kept rates at 3.75% today, while the ECB also held steady. Eurozone inflation jumped to 3% with growth stalling, a classic stagflation picture that complicates any path to rate cuts in Europe. And in a surprising development, U.S. senators voted to ban themselves from trading on prediction markets, a rare bipartisan move that highlights growing concerns about insider trading in political contracts. Now big tech, the biggest story of the day. Alphabet absolutely crushed it. Revenue beat, cloud growth accelerated, and management justified their raised spending projections. The stock soared 10% in a single session, adding over $200 billion in market cap. Google Cloud is now a legitimate third cloud player, and investors rewarded that narrative. Meta was the opposite story. The stock dropped 8.6% after reporting. While revenue was in line, the market is digesting the blocked Manus acquisition in China and rising cost pressures from AI infrastructure spending. Beijing's decision to block Meta's acquisition of Manus is what one analyst called a draconian development in the US-China AI race. For Meta, the AI narrative just got more complicated and expensive. The AI capex story just got bigger. Big tech capital expenditures are now expected to top $1 trillion by 2027, according to a new industry analysis. This spending boom is both an opportunity for infrastructure players and a risk if the returns don't materialize as quickly as hoped. Nvidia, meanwhile, invested in an AI legal startup, signaling further expansion of artificial intelligence into the legal sector. Microsoft slipped 3.9% and Amazon was flat, a mixed bag for the Mag 7. The overall takeaway, cloud growth is where the money flowed today. Inflation is back in focus. The March PCE reading, the Fed's preferred inflation gauge, posted its biggest increase in almost 3 years, now at levels not seen since mid-2023. Jeffrey Bartash of MarketWatch summed it up, the Fed's hands are tied. Between the Iran war driving oil and shipping costs, and a resilient consumer keeping demand alive, inflation is proving stickier than anyone hoped. Jamie Dimon of JP Morgan warned this week of some kind of bond crisis ahead as global debt risks build. His point is that today's growing mix of geopolitical tension, fiscal deficits, and inflation pressure could combine in unpredictable ways. Caterpillar jumped 10% after handily beating Wall Street estimates, not for the first time. The construction manufacturer reported a 38% surge in sales in its construction industry segment and raised its full-year outlook. The global infrastructure build-out is real, and CAT is the direct beneficiary. Qualcomm surged 15% in one of the biggest single-day moves of the year. Investors are looking past a weak current quarter outlook and focusing on the massive AI opportunity ahead. Qualcomm's positioned perfectly for the edge AI wave, AI processing on devices rather than in the cloud. SoFi recovered 3.7% today after its CEO defended the decision to hold guidance steady. CEO Anthony Noto explained that macro uncertainty, not weakness in fundamentals, drove the decision. The stock is stabilizing after last week's post-earnings sell-off. Ford profit jumped as the automaker powered through an EV slowdown, getting a hefty tariff refund and raising its full-year outlook. Royal Caribbean said cruise bookings are back above year-ago levels after a dip in March. And one more angle on inflation, retail investors are now trading the mania in chip stocks, according to Goldman Sachs traders. They warn that some of these high-stakes bets may be hard to get out of if things go wrong. Stellantis fell 10% after disappointing Q1 results, making it one of the worst performers of the day. The automaker cited pricing pressure and inventory buildup in North America. And in the aviation sector, a jet fuel bidding war is unfolding as airlines confront a global stress test over fuel shortages. The combination of refining capacity constraints and geopolitical tensions is driving a scramble for supply, putting pressure on airline margins just as summer travel season approaches. Now for our stock picks for tomorrow. These are 4 names I'm watching closely. First pick, Qualcomm. The stock surged 15% today on AI opportunity, and the market is looking past near-term weakness. The legendary growth stock investor, Philip Fisher, would call this a classic scuttlebutt opportunity. The market is focused on Q3 guidance, but those who do the deeper research see the edge AI transformation. Fisher's philosophy was to find great companies when others focus on the wrong metrics. He'd say this is exactly the kind of temporary distraction that creates buying opportunities. Second pick, Caterpillar. Up 10% today with 38% construction sales growth and a raised outlook. The global infrastructure supercycle is just getting started. The world's most famous value investor, Benjamin Graham, would appreciate the margin of safety here. CAT's PE is still reasonable relative to its growth trajectory, and its backlog stretches years into the future. Graham taught us to buy when there's a sufficient discount to intrinsic value, and CAT's pricing power in a supply-constrained world provides exactly that. Third pick, Eli Lilly. It just reported earnings that blew past quarterly estimates, with Zepbound and Mounjaro sales skyrocketing. The company hiked its full-year outlook. The modern contrarian investing legend, John Templeton, would recognize a company with a truly global product. Diabetes and obesity are worldwide epidemics, giving Lilly a multi-year runway. And now with this earnings beat, the fundamental story is only getting stronger. Fourth pick, SoFi at $16.10, recovering 3.7% today. The legendary fund manager, Peter Lynch, would love this story. He famously said, "Invest in what you know," and millions of young Americans know SoFi. It's the financial super app they use daily. Lynch would classify SoFi as a fast grower and apply his PEG ratio test. The key question, is the growth rate exceeding the PE ratio? With revenue growing 41% and the stock at $16, the PEG ratio looks compelling. He'd watch closely to see if the personal loan business accelerates in the coming quarters. Tomorrow's key events, Apple just reported earnings after the bell, revenue guidance topped estimates, with booming iPhone and Mac demand driving the beat. The March PCE data will continue to reverberate. Also, the April ISM manufacturing PMI on Friday. Thanks for watching. I'm Chloe, and I'll see you tomorrow for another market close breakdown. See you tomorrow for another market close breakdown. Check our shorts for a 60-second highlight. That's all for today. We all become wealthy together.